You do not need a massive account to start selling options. In today's video, I'm going to show you how you can get started with just 1,500 bucks. Yo, what's going on, Premium Chasers? I hope you are having a God-blessed day. If you just drop a comment down below in today's video, you're going to get a free special bonus, our small account starter guide, completely for free, no strings attached. Just drop a comment down below and it's yours. And while you're down there, hit that like button and that subscribe button. It helps me tremendously reach more people with this content. But guys, today we're talking about how you can get started selling options, even if you are working with a small account. Now, the strategy you're going to learn today, it's boring, it pays to be patient, and of course, it requires some discipline. So if you're some day trading degenerate, right, I believe you're in the right place, because day traders, 97% of them end up failing. And it was this strategy that I found about 7 years ago that I have shifted my entire mindset on how to be an investor in the markets. And let's go over the shoulder so we could get started. So the first thing that you need is a stock, right? What is a stock that you believe in that fits within your budget? So firstly, we're just going to use Snapchat as our example today. If you guys have been following along in our public the public portfolio trade log, you guys know I've traded Snapchat a lot with this strategy, and I've had some some pretty nice gains. Okay, and if you want this trade log, it's free. Just attend the Ark Options Strategy workshop. The first link in the description. But the reason we need a cheaper stock is because when we sell options, we have the obligation now to do something. Meaning, as an options buyer, you have the right, but as an option seller, we have the obligation. Now, what does that mean? Well, that means that if we sell an option on Snapchat, let's say we sell a put, we may have to buy 100 shares of the stock. So let's go over the shoulder and I'll show you it visually because I think it'll make it a lot more sense. So for example, Snapchat is currently trading at $7.72 at the time of me recording this video. Now, if I want to buy 100 shares of Snapchat, I can obviously just go out there and buy 100 shares at the current market value of $770, right? Not a problem at all, right? That's $770 gone, right? But what I can do instead is use this $1,500 to actually generate a premium, right? So first thing we're going to do is go over to the trade options section by clicking this button, and then we're going to click sell a put. Okay, this is all I'm saying is I want to buy 100 shares of Snapchat. Now I get to choose the date. I usually like to either do weeklies. We're obviously in like a weird time right now with the holiday, or I like to do monthly. So I'm just going to go just under 30 days. I'm going to go 25 days away. Now I can actually name the price that I'd be willing to own 100 shares of Snapchat. So for this example, let's just say you would actually want to own it at $750. You'd be willing to buy 100 shares at $750. Well, if you did that, we would actually be given a nice premium of $26. Actually, a bit more because you can see our bid is 26, our ask is 36. So we'd be getting around $30 of premium if we want to be there right in the middle. So we get $30 of premium. This is coming from the options buyer, and this is deposited immediately into our account. Obviously, not financial advice. Results vary. This is just the premium I'm seeing at the time of me recording this video. But either way, I like to take everything and get myself nice and organized here in my premium calculator, which again is free at the end of the Ark Options workshop. So I'm collecting $30 of premium from the options buyer, right? I have to lock up money, guys. Unfortunately, that's the name of this game. When you sell options, you are locking up your collateral. You're locking up your money or your shares, and more on that in a minute. So I'm locking up $750 because 750 times 100 is $750. Now I'm locking that up for 25 days. So put 750 right here, right? And I'm locking that up for 25 days. Fantastic, right? Now I'm getting a 4% return on my money. Again, not financial advisor. Go do your own research. This obviously involves risk. I'm going to tell you what the risks are in a moment. How am I getting this number? All I'm dividing is my premium divided by my collateral of $750. Now we have about a $1,500 budget. If I did 2 contracts, that would put me basically right there. Okay, at $1,500. I wish I planned this because I swear to you, I didn't even do that. You guys already know I don't have editors or anything like that. So, but if I did 2 contracts, right here, I would have essentially collected $60 up front. My $1,500 would be locked up, right, for 25 days, and I would have a return of a 4%. Now, let's talk about the risks, because me personally, I love this strategy. Now, some of you might be like, Pete, these gains suck. 4% in a month, like that sucks. Listen, again, let's just talk about the risks, right? Let's come back down to reality. Anybody telling you you're doing 30, 40, 50% a month, like, let's bring the logical brain back to earth, right? But with that said, right, what can happen? How can this go south on us, right? What are the risks? Well, here's the first risk. Like, the ideal situation for us is, like, let's say the 19th rolls around and Snapchat is trading above 750. Let's say it's trading at like 773, $8, $9, right? Well, guess what? We don't have to buy our shares at the close because it's not trading at that, right? Real easy to understand, right? But the second thing that can actually happen to us is that, let's say it's trading below 750. Let's say it's trading at 7 or 650. Well, guess what? You're buying your shares at 750, right? That's the risk of this. And that is part of the game. That's just what happens, right? So that is the biggest risk. Understand that you could sometimes have to buy your shares at a price lower than the current market value. Now, this is if you are truly passive with this strategy. A lot of people in our communities, they will do this. They're not active day traders. I'm not an active day trader. I'm a little bit more involved, yes, but there's nothing wrong with just clicking, and doing your trade and then letting it go to the expiration date. There's absolutely nothing wrong with that, right? And a lot of people do that, and they see what happens at the expiration. Did they have to buy, right, their shares? Okay, cool. Now let's talk about worst case, best case situation. It expires, you get your $1,500 back. Well, you could run the play again, collect more premium, and now you're left with more cash, right? You're now left with $1,560 as opposed to $1,500. I believe this is the slow and steady way to win in options trading. I think options buying just is degeneracy. I think those things are designed to take money from people that are desperate to try to make something happen, as opposed to here, I'm paid to be patient, guys. Like literally, I'm choosing the situation. If I actually believe in the company, I'm getting it at a discounted rate for myself, okay? But here's the second leg of this, right? Because if you end up having to buy them, right, if you have to, let's say you bought 100 shares of Snapchat at 750, we'll just say at the just for the sake of this example, let's say you don't get your $1,500 back. You get 200 shares you're getting of Snapchat at a cost basis of 750, right? That can happen, right? At the close on the 19th. Well, what we can then do is do a sell call. Now, our asset is not going to be our money anymore. Our asset is going to be the $1,500 of Snapchat shares that we have. So let's say now here, obviously the expiration would be pushed out further, but for the sake of this example, right? What we would do now is say, hey, you know what? We're willing to sell it at $8. We're willing to sell the shares that we just bought at 750. We're willing to sell them at $8. Now, for that, we'd collect $29 of premium. Again, yeah, actually that's fine. 29. It's a bid and ask is between 29 and 31, so that's fine. So we collect $29 of premium, and you guessed it, I got a calculator for that too. So I'm going to zoom in here so you guys can see it, and I collect $30 of premium here, right? My strike of the option, right? My strike of the option is what I'm willing to sell my shares for. I said $8, right? My purchase strike price is $7.50, right? That's just the average our cost basis, and you can see our premium return is just exactly the same as the cash secured put, about a 4% return. Our profit on the shares is $50 for a total profit if we sell them of $80. Now, obviously multiply these numbers by 2 because you're doing 2 contracts, so your premium collected would be $60, right? Because you're locking up, 200 shares, okay? But let's talk about the risks on this side, right? So if you did that trade and let's say the 19th rolled around and it's trading below 8, well, it's not trading at 8, so you're not selling your shares. Fantastic, right? So, but what about if it's trading above 8 at close? Let's say it's trading at $9. Well, you're missing out on those additional gains. You're locked in to sell your shares at 8, okay? Now, the cool part about this strategy, guys, right, is that you kind of know the terms. You've capped your upside here, right? You've kind of dollar cost averaged, if you want to, on the put side. And the thing is, most of the time you're closing your positions out early. You could see on my trade log here, most of the time I've only been assigned, and I've been doing this since the end of June publicly here, I've only been signed 12 times. 12% of the time. 6% of the time my contracts expired worthless. I just let them go to expiration, right? And this one actually expired here too. I didn't even update our log. I'll update it right here with you guys live. That one expired here worthless as well here just this past Friday. I actually opened up another position. I'll shoot another video on that, so stay tuned. Make sure to subscribe if you like this stuff. So another one expired. Plus, most of my stuff I'm closing out early. The point I'm trying to make is most of the time you're closing your position out right before it gets to the expiration date, and very rarely do you end up having to buy or sell your shares unless you're being a lot more aggressive and playing close to the money. And that's just how the game goes, right? If you're being more aggressive, you have a lot more chance of assignment, right? If you're being less aggressive, right, you have a less chance of assignment, but it's still a possibility. And you could see that's happened to me a few times on Snapchat. Here, look, back in June here, or July, you can see I was assigned my shares right here on Snapshot. I had to buy shares at $7.50, and then I end up, selling my shares for $8. I literally did the exact same play. I wish I called this, right? But you could see I sold them at $8, right? The shares that I bought at $7.50, literally the following month, right? And I did the same thing with my SoFi play, and that's just part of the game. Getting assigned is okay because then we can sell those calls, right? And look at it, we would have missed out on that appreciation profit that we'd be collecting if we didn't end up doing it. So if you want this full trade log, you want the calculator size, click that first link in the description of today's video. Watch the Ark Options workshop. It's going to bring you up to speed on this entire strategy. Click that first link, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.